Hey guys, welcome to another clip. I have been chatting to a lot of people, and a hot topic right now since the 1st of March is most definitely the new tax bracket for individuals earning over 1.5 million Rand a year. Now, a lot of people are a little bit nervous of this, but of course, Prop and Go Down didn't really have many choices. Now, there are a whole lot of political reasons, there are a whole lot of economic reasons, which we're not going to get into right now. But the bottom line is that South Africa's tax base is feeling the squeeze. There was also no bracket creep, which means there was no increase in inflation, making sure that the real income that you're earning was taxed at pretty much the same level should you have gotten a 5 to 6% increase, which means that a lot of people are paying slightly more tax now than they were last year. What does this ultimately do? It drops people's disposable income levels, and of course puts the pressure on consumers even more. Now, there's a couple of very interesting stats that I'd like to share with you. I attended a conference the other day with Stanlib, and Kevin Lings, the chief economist at Stanlib, had some very interesting information for us. So, of course, we have a very narrow tax base of individuals. So as it is right now, there are 14 million registered taxpayers, and of course 7.4 million of those are liable to submit a tax return. That means that they are earning a salary, they are getting taxed every month, they are having deductions taken off which they can claim tax back from. The top 1.9 million of those 14 million, so almost 2 million of the 14 million, pay 81% of all income tax in South Africa. And 483,000 people pay 50.1% of income tax. So when you consider that, if we go back 14 million taxpayers, just under 2 million pay 81% of that, and 483,000 people pay 50.1% of our income tax. So as you can see, we do have a lot of registered taxpayers, but a very narrow amount of those people are actually able to commit enough tax so that the revenue and obviously the budget can be done. Now, in the past couple of years, we've had a few issues. We've had declining tax revenue. That's because, of course, we've had declining growth in our country. Companies who are sitting on large stockpiles of cash right now are not investing their money in growth because of the slightly tenuous political environment. So of course, you're probably thinking, oh, what can I do about this? Well, the bottom line is this: not much. Remember, going back to our comments and our content a little bit in our earlier weeks about micro and macro things you can and can't control, I just have to say this, that when it comes down to situations like these, trust that things are going to get better. Growth has already been revised to go up to 1% for 2017. There are very little whispers of a rate decrease towards the end of this year or maybe even next year. So things are getting better. We've just got to hang in there, as I always say, work hard, save hard, and be prosperous.